Ladies and gentlemen, good day and welcome to the Greaves Cotton Limited's Q3 and 9 months FY24 earnings conference call. From the management, we have with us Mr. Nagesh Baswanhali, Non-Executive Vice Chairman, GCL, Dr. Arup Basu, Managing Director, GCL, Akila Balachandar, Group CFO, GCL, Sanjay Bail, CEO and ED, GEMPL, Narsimha Jayakumar, CEO, Greaves Retail, Chandrasekhar Tyagaranjan, CFO, GEMPL. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks are concluded. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Nagesh Baswanhali, Non-Executive Vice Chairman of Greaves Cotton Limited. Thank you, and over to you, sir.
Good afternoon, everybody. Thank you for joining the Q3 call for Greaves Cotton. At the outset, let me say a few words and then hand it over to management for the commentary. We're happy to report the reports, the details of which the CFO will be discussing shortly. At the outset, our diverse portfolio and the strategy over the years with a commitment to fuel-agnostic solutions have played a pivotal role in driving our advancements. We're also glad to report the synergistic collaboration with Excel Control Linkage is bringing new capabilities and newer avenues of growth for Greaves. And Greaves Engineering continues to expand its presence in engines and other areas. Greaves Retail, backed by its asset-light, high ROC business, can fortify its presence in the aftermarket, aligning with our goal of continued expansion both in domestic and other markets. Our enduring success is rooted in steadfast focus on capability building, our value proposition, and our ability to fulfill the requirements of our diverse customer base. With that, let me hand it over to Dr. Basu, the MD of Greaves.
Thank you, Nagesh. Good afternoon, ladies and gentlemen. My commentary is on the performance of Greaves Engineering, that is engines and Excel Control Linkage. We continue to make good progress on our ongoing program to build a future-ready, fuel-agnostic portfolio to gradually wean us from a dependence on demand for diesel engines. As I mentioned during the analyst call on 8 November 2023, the IC engine and genset portfolio is being augmented with greener fuel-agnostic variants that can use CNG, biodiesel, and ethanol blended fuels. In addition, we have commenced sales of fuel-agnostic engine components. This new product line utilizes our current manufacturing equipment and will help us extract more value from our manufacturing infrastructure and other equipment. Additionally, as this new product line relies on our existing domain expertise in precision machining, the business can grow relatively rapidly. Simultaneously, we are increasing our share of exports, which in Q3 FY24 has increased to about 15% of our revenues. The integration with Excel Control Linkage has moved to the next stage with the initiation of cross-selling products and services. Simultaneously, we are continuing to augment our prevailing domain depth in mechanical engineering with mechatronics and electronics. The latter will also help accelerate the growth of electronic sensors. In Q3 FY24, Greaves Engineering delivered an operating profit margin of 15.5% on revenues of 375 crore, higher than the 5.5% EBITDA that was delivered in Q3 FY23 and higher than the 14.5% EBITDA delivered in Q2 FY24. In the engine segment, operating profit margin improved to 12.6% in Q3 FY24 on revenues of 301 crore, compared to 5.5% EBITDA in Q3 FY23 and 10.5% in Q2 FY24. Excel Control Linkage delivered an operating profit margin of 27.5% on revenues of rupees 74 crore in Q3 FY24. Overall, the prevailing tailwinds in the Indian economy, our increasing global customer base, the diversity of our platform technologies and application areas, combined with our brand Greaves, makes us optimistic about the future. Thank you. I now hand it over to Sanjay Bale. Over to you, Sanjay.
Thank you, Arup. I'm going to talk about the Greaves Electric Mobility business for quarter 3. Overall, Greaves Electric Mobility had an excellent quarter in three-wheeler business with 37% Y-on-Y growth, while our L3 business registered a healthy 18% growth. The L5 business nearly doubled during the quarter with 94% year-on-year growth. Our new electric cargo three-wheeler business, Greaves Ultra branded, is now FAME subsidy eligible and listed on the NAB portal. The NAB portal, effective 15th of January 2024. The electric passenger three-wheeler vehicle business has also been FAME certified now, and we expect listing on the NAB portal over the coming few days. We are confident of a good retail offtake starting this month for our EV three-wheeler business, both for ultra cargo and passenger vehicles. In our two-wheeler business, while the overall volumes declined on a quarter-on-quarter basis, Ampere registrations grew on Vahan by 9% in quarter 3, and the brand continues to be amongst the top 5 electric scooters in India. As announced during the Auto Expo last year, we will soon be launching the much-awaited NXG scooter. This new-age, high-speed, fully connected scooter is 100% in-house designed by the Greaves design team and will be manufactured at our EV mega site in Ranipet. This new scooter from Ampere portfolio is equipped with one of the lightest operating software and brightest touchscreens, ensuring seamless navigation and connectivity, elevating the riding experience to a new height. With an objective to demonstrate NXG's impressive power, performance, and superiority, we have embarked upon an unprecedented 5,100 kilometer long Kashmir to Kanyakumari drive on January 14th of this year, just about 3 weeks back, and we started symbolically with Riyasi, the source of the lithium find in Jammu Kashmir. This is the first of its road travel challenge undertaken, and that too in extreme climatic condition and vastly varying road terrains of the country by any electric vehicle of any format in India. With these vehicles halfway in their journey, the response from the field has been extremely positive thus far. We continue to stay invested in launching new products and variants, and we are hopeful of continuing profitable growth in the coming quarters. Thank you. May I now hand over to Narasimha from Greaves Retail.
Good afternoon, ladies and gentlemen. This is Narasimha Jaikumar, CEO of Greaves Retail. Very pleased to give you an update for quarter 3. Greaves Retail recorded a revenue of 141 crores for quarter 3 FY24. Very strong EBITDA margins of 21.4%. We had higher spare part sales in all our core markets with much better product mix. Q3 EBITDA margins were up by 310 basis points on a year-on-year basis. And for the 9 months financial year 24, we recorded a revenue of 425 crores, that's 8% Y-on-Y. Greaves Retail continues to be committed to its strategy to be a fuel-agnostic aftermarket player with a focus on multi-brand part sales. During the quarter, Greaves Retail expanded its range of various products, namely our Greaves Power Raja batteries, various EV parts for the aftermarket, catering to the e-rickshaw segment. These include motors, controllers, chargers, DC-DC converters, etc. for the e-rickshaw segment. We also launched a number of digital and technology initiatives, including the launch of our new Greaves Care app for three-wheeler and two-wheeler customers that enable them to digitally manage their service bookings and get notifications when their service is due. Considering the growth of the EV population, particularly e-rickshaws, the business continues to expand distribution and retailing reach, as I've stated previously in our calls, across the country, with a greater emphasis on tier 2, 3, 4 cities and towns in the north and east of the country. At the end of quarter 3, we had our retailing network had approximately 9,300 retailers, including 250 specialist stockists for our EV parts and batteries, 130 plus distributors, and we have engaged with 21,000 plus mechanics in the country. Our recent launch of our Greaves Upahar, which is our mechanic loyalty program app, and our other apps strengthens our connections with our partners and customers. I just want to reiterate that we are a very asset-light business and with a very high ROC. ROC for the quarter exceeded 100%. So excited about that. Just handing it over to now Akhila.
Thanks, Narasimha, and good afternoon, everyone. We are very happy to report our consolidated revenue for the quarter of 665 crore, up by 30% on a year-on-year basis, compared to 514 crores last year Q3. On a standalone basis, GCL has reported a revenue of 443 crore, up by 21% year-on-year. Excel, as already shared by Arup, reported a revenue of 74 crore, and Electric Mobility has reported a revenue of 149 crores. For the 9-month period, GCL has reported a standalone revenue of 1,297 crores, up by 17%. Again, on a standalone level, GCL reported an EBITDA of 67 crores, which is a growth of 73% year-on-year. Our margins have improved by 450 basis points. That is, we moved from 10.7% to 15.2%. Here I would like to share that we continue on our EBITDA improvement journey. This quarter, we have reported EBITDA at 15.2%, which is possibly the highest in the last 8 to 10 quarters. And if I were to look at GCL plus Excel as a combination, the margin stands at a healthy 16.9%. This now puts us back on track of our historical trend of 13+% margins of pre-COVID levels. On a YTD basis also, our EBITDA for the 9-month period stood at 175 crores. Same period last year, our EBITDA was 100 crores and hence a growth of 76% year-on-year. Our improvement in margins has also been by 450 basis points for this period, up from 9.1% to 13.5%. Along with the margins, we have been very focused on capital efficiency, both at the capex level and at the working capital level, and this has ensured that our ROC today stands at a healthy 50+% level. In terms of balance sheet strength, the company continues to be almost at a zero debt level, and we have a consolidated cash position of 600 plus crores, which we can be used for further expansion as we go forward. Looking forward, we remain steadfast in our commitment to our growth strategy. We are also confident that our strong foundation and unwavering commitment to excellence will sustain our success in the forthcoming quarters and the exciting opportunities the future holds. One area that we had seen a lot of pressure in the early part of last year was the overall commodity cycle, and that led to increase in the raw material cost for some of our product segments. I'm happy to note that the commodity cycle softening is having a positive impact, and as we go forward, we're expecting the raw material prices and raw material cost as a percentage of revenue to remain stable in the coming quarters. I would just like to take a step back. We did receive a number of questions over the last quarter regarding FAME subsidy. and I would like to point out to the note number 6 in our consolidated financials, and would like to share again that Jempel has submitted its response to the notice that it received from MHI within the prescribed timelines. The management has complied with the scheme, duly considering and supported by legal advice. However, keeping in mind the interest of the consumers and without accepting any of the allegations, contentions or statements in the notice, and without any prejudice, Jempel on October 27, 2023, offered to amicably resolve and put a quietus to the matter, refunded an amount of 140 crores towards the subsidy reimbursed by the MHI to date, which is 124.9 crore and an interest of 15.1 crore. The amount refunded and the subsidy receivable of rupees 337.3 crores net of provisions have been fully provided for as an exceptional item in the statement during the second quarter of the financial year. With this, there is no further liability which rests on the company regarding this matter. Again, this is was explained in the last quarter, but given number of questions, I am just re-clarifying the entire position. With this, I now open the floor for any Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Amyn Pirani from JP Morgan. Please go ahead.
Yes, hi. Thanks for the opportunity. My first question is on the EV business as well as more specifically on the EV two-wheelers. You mentioned that, you are, going to be soon launching the NXG, which was shown at the last Auto Expo. I just wanted to, get a sense from you in terms of how we should think about pricing, given that a lot of the startups as well as legacy companies have launched lower priced products. And we, in an extreme case, at least one company, has started launching extremely low priced products, almost taking the price of a smart EV to the price of a very basic EV more recently. So how should we think about pricing and profitability going forward as you embark on new launches and try to regain, some of the market share?
Yes, thank you very much. I will take it. Sanjay Behal here. Look, if you've seen the philosophy of pricing by Greaves, in fact, over the past 4 years, if you look at our electric portfolio, we have adequately demonstrated cost and price in this category and will continue to stay the course. Our core philosophy is to balance growth, market share, and profitability. So and if you look at the overall numbers, we still are, even without subsidy, a double-digit gross margin positive business in EV. And I'm specifically talking to two-wheelers that you referred to. So what is to be expected is in the new scooter that we are launching, the price will be competitive to make sure that we stay unit economics positive, and if subsidy gets restored going forward, which we expect, I think it will be a healthy margin. That's what you should expect.
Okay, that's good to know. And as a corollary to this, how much of a benefit are you already seeing or are expecting to see from the fact that cell prices have fallen? Is this double-digit gross margin helped already because of the decline in cell prices, or this is something that can get some more benefit going forward?
So, partly you're right. In fact, there has been a globally softening of cell prices that we've seen over the last 2 quarters. And part of the benefit is being passed on by the industry that is helping us also. So that is there. And we expect that with the overall scale going up in electric vehicle industry across all the formats there, we expect the cell prices to continue to stay where they are. And if that happens, or continue to come down slightly, and if that happens, you will find us also becoming more price competitive and margin healthy as we go forward. That's right.
Great. Thanks a lot. I'll come back in the queue.
Okay.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, to ask a question, you may press star and 1 on a touch-tone telephone. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Jyoti Singh from Aryan Capital Markets Limited. Please go ahead.
Thank you for the opportunity. And sir and Greaves team, congratulations on a very good set of numbers this Q3. And sir, my question is on the growth side. So, what are expectations going forward for the 25 and 26?
Jyoti, can you repeat the question, please?
Yeah, ma'am, my question is on the growth side. What are expectations on the top line side going forward?
Oh, you're talking of the future?
Yes.
So, Jyoti, we will not be, as a policy, the company has not been giving any forward guidance, and that is the policy that we continue to have. But if you have been, you've been tracking us for the past so many quarters, there has been a transformation journey which is now in play for more than 7 to 8 quarters, and whatever has been talked about and committed by the management is a lot of things work in progress, and a lot of things are continuing now to play out. So that is what I would be able to share about it.
Yes, ma'am. Ma'am, also it will be very helpful if you can guide us, segment-wise, which segment we are seeing more traction. That will also helpful for us.
When you say segment, would it be retail and engines business, or is there anything else that you're looking forward?
Yes, ma'am, retail and engine business.
Sure. So if you were to look at both the business performance over the last this quarter as well as a journey over the last 7-8 quarters, let me just go back in time a bit, where the Greaves engines business, if I were to take Q3 FY20, Q1 FY23, and therefore 7 quarters, we've really moved from 253 crores on a quarterly run rate to now 300 plus crores. And an EBITDA improving from 2.9% margin to 12.6%. On the Greaves retail, we moved the needle from 121 crores to 141 crores, and the margin improvement has been significant from 16.5% to 21.4%. On a quarter-on-quarter basis, we have done growth of approximately 21% compared to same period last year, and at a Greaves Cotton level. And this has been the journey of the company. Given that we acquired Excel in May of 2023, this also now has been additive to our overall business performance. And if you note, Excel has done extremely well. They've delivered results of 74 crores top line and an EBITDA margin of 27.5%. GCL plus Excel hence gives me a very good combined result of 517 crores for the quarter with a margin of close to 17%, 16.9 to be very precise. So this is the journey that we have now gone through.
Okay, thank you, ma'am.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Himanshu Dugar from Safe Gains. Please go ahead.
Hi. I would like if you could just give us an update around the cash deployment plans on your capex, on your timeline, any acquisitions, and what are you looking at right now?
Sure. Thanks, Himanshu. So, Himanshu, as you are aware, we currently have close to 400 crore plus of cash at a standalone level and close to 600 crore plus at the consolidated level, which means our subsidiary, Greaves Electric Mobility, has 200 crores approximately of cash on their books. Both these companies have very strong capex plans going forward. Greaves Cotton, our capex plan is approximately 100 crore for this year, and Greaves Electric Mobility has got its own plans of another 100 crores capex in the current year. All these investments are towards development of newer technologies and improving the existing product portfolio. This is core to the business, and that is where we are currently investing. Apart from that, we are also actively looking for opportunities where we can acquire stakes in businesses which will be additive to our core businesses, which is both the engines, retails, and electric mobility businesses. So we do have enough, strength in our balance sheet today to do some really good acquisitions. I hope that answers your question.
Just a follow-up on that, especially on the electric side, what is the current capacity levels and utilization? And in this new capex, are you looking at design-related capex, or is it again going to be towards some amount of capacity?
So, Sanjay Behla, look, most of the capex till now, if you know the Ranipet, which is the EV mega site capacity for our two-wheeler business, 250,000 already existing with one shift and going to 500,000 scooters in two shifts there. So there is very limited capacity. Most of this is growth-related capex, which is getting into product development. That's really the number one, and capacity is minimal in the current financial year. We already have adequate capacity. Both are two and three-wheeler businesses.
Sorry, I'm not able to follow. This 100 crore that you're planning to spend in the coming year, what are you...
Most of it is on product development. Capacity is limited because both our two and three-wheeler businesses have adequate capacity and headspace for continued growth for some time to come.
Okay. Any insights on your product pipeline in terms of what are the kind of products that you're planning to launch or some other gaps in your product portfolio? Because I understand, given the recent launches also, you're kind of covering most of the gaps, different types available. So what else do you think is pending, or where else do you want to introduce more products?
So in the electric mobility side, one segment where we wanted to represent, and that's what I talked about in my opening commentary also, was the high-speed, fully connected IoT segment there. And that's getting filled up with the impending launch of NXG as it gets into the launch sometime in the first half of this year. So that is the one that is getting filled up in electric two-wheeler. That will make Greaves Electric Mobility a strong player across all the three segments in slow speed with Rio, which we launched last quarter. City speed, we have anyway been very strong leading position there with Magnus EX. And coming to high speed, one with Primus that we launched and now getting completed with NXG, we would have a representation across all the four segments. On the three-wheeler side, one segment where we have not been represented is the electric three-wheeler L5 format,